Yeah, so actually, usually most of the countries in the region move in tandem. But in China's case, in this cycle, it is lagging the rest of the region. And we have been using the developments in India as a sort of benchmark to follow for China. One thing which China is similar to India and rest of Asia in this cycle is that they have not taken up aggressive fiscal transfers to the households like US and Europe. And so the economic recovery on the consumption side is more organic. And so what we saw in India's case is that initially you tended to see pickup in services sector spending and then goods join later. And in terms of the income segment, it's the middle to high income segment that goes first, and then the low income to middle income segment joins the recovery. And you are seeing that in case of two-wheeler sales in India versus car sales. Two-wheeler sales are now looking like they are picking up. And there was a challenge in the initial period as soon as the recovery began in April 2022 last year. So in China's case as well, we think something similar is happening. Right now, services sector PMI is looking strong, but the goods spending has not picked up as much, and so therefore the manufacturing sector is not yet strong. And the high to middle income segment has first taken off. So if you heard the results of luxury companies, luxury goods segment companies, multinationals, they all felt that they had good uptake in China sales, but the mass market products has not yet still seen that full recovery. So we think China's consumption recovery is on track if you wear this lens of analyzing what happened in rest of Asia. And I think by the time another 6 to 9 months, you will have more broad-based recovery in China as well.
Chetan, what are your thoughts on flows into Asia, particularly India? Because after witnessing a very long spell of outflows, past few months, FIs seem to have come back to India. Even on the flows on the other side, FDI, we are seeing one MNC after the other coming to India, talking to us. Economic Times front page splashed that, want to set up some manufacturing or expand business. Tim Cook, Foxconn, to name a few. How do you see the situation in India next, say, 12 months on flows front, both from FDI and from FIs? Because you're talking about.
Yeah, so I would really borrow from our strategy team. So our regional strategist, Jonathan Garner, is quite constructive on EM and Asia relative to DMs. So on a relative basis, we are expecting EMs to get more attention in the next 12 months. And broadly speaking, the macro dynamics in Asia is very different from what you're seeing in the US and Europe. So number one factor that is putting Asia and India in a different position is that we've not had a big inflation problem. And so therefore, we've not had a big interest rate shock. So if you look at the weighted average policy rate increases in Asia, it's gone up by 100 basis points. Whereas in the US, it's gone up by 500 basis points. And in Europe, it's gone up already by about 375 basis points. So we've seen a very different interest rate environment, and the monetary policies in the region are supportive to get the domestic demand growth going. Number two is that, we have country-specific factors. So India's story we already discussed. We expect China's reopening-led domestic demand to pick up going forward. Similarly, there's another two countries, which is Indonesia and Japan, which have country-specific factors driving domestic demand. So that builds up to a very attractive growth opportunity. And we're expecting regions growth to be at 5.1% by the fourth quarter of this year, whereas the US will slow down to about 0.4. So there will be 460 basis point growth outperformance. And that's what we think will drive the attention of investors to the region. But within that, India is one of the best performing economies in terms of the growth differentials. So certainly India should also see that benefit of that attention that investors pay down to the region.